Hello and welcome to Wednesday here at Ausbiz. You're watching The Global View. I'm Andrew Gagan. Good to have you with us. So let's take a look at what happened overnight. Global equities easing as investors wait on some key economic data later in the week. The major indices on Wall Street finishing lower. That is ahead of tonight's inflation report and next week's Federal Reserve decision on interest rates. Now, tech stocks again weighed down the broader market, led by Nvidia, while Oracle shares tumbled after the cloud computing company missed analyst estimates for second quarter results. However, shares in Google parent Alphabet rose strongly after it unveiled a new generation chip called Willow that the company says helps overcome a key challenge in quantum computing. Shares of Tesla rose, with Morgan Stanley raising its target price for the EV maker to $400 from $310. Software firm MongoDB plummeted despite raising its forecast for annual results. Shares of Walgreens Boots Alliance surged on news that it's in talks to be acquired by private equity firm Sycamore Partners. The US court has blocked the pending $25 billion merger of US grocery chains Kroger and Albertsons on competition concerns. And shares in US Steel, well, they were paused, having plunged around 18% on reports that the Biden administration will reject Nippon Steel's takeover bid. Alaska Airlines soared as the carrier raised its fourth quarter profit forecast. Boeing shares also took off on reports that the aircraft manufacturer restarted production of its 737 MAX jets last week. And the gold miners actually finishing a little mixed there, but they did rise initially, with the price of bullion climbing to a 2-week high. Well, US small business confidence has increased to its highest level in nearly 3.5 years in November. Amid post-election euphoria, the National Federation of Independent Business Survey's uncertainty index fell 12 points from a record high of 110 just prior to the presidential election in October. And US unit labour costs grew far less than initially thought in the third quarter, pointing to a still favourable inflation outlook, which is likely to be welcomed by Federal Reserve officials when they hold their last meeting of the year next week. And in China, exports increased 6.7% year on year in November, imports falling 3.9%, yielding a larger than expected trade surplus of around $97.5 billion. US Treasury yields have risen before an auction of $58 billion in 3-year notes as traders await key inflation data. The yield on the 10-year note up around 3 basis points to 4.22, the 2-year around 4.14%. And the US dollar has strengthened slightly, the Aussie dropping sharply after the Reserve Bank yesterday softened its tone on the inflation outlook, and it remains below 64 US cents, currently at 63.8. And Bitcoin trading around just below 97,000 US dollars. In terms of commodities, oil prices have risen with the market buoyed by the prospect of rising demand in China from further economic stimulus, while supply is forecast to be tight in Europe over the winter. Brent crude futures up to $72 a barrel. Copper prices a little changed, as is iron ore, which is $105 US dollars a tonne. And as mentioned, the gold price sitting at 2-week high. That's on rising geopolitical tensions and expectations of another interest rate cut by the Fed. Spot gold up 1.3% at $2,692 an ounce. Well, let's take a look at the investment environment at the moment with a focus on global equities. Elfreda Jonker joining us from Alphinity Investment Management. Good to see you.
Good morning,
as
Andrew.
we round out the year and look ahead to 2025. Taking a look at what we're seeing on US markets at the moment, that rally is persisting. I do note, though, that we thought perhaps the boost from tech might have been over, but so the S&P's up about 4.5% since the election. The Mag 7 accounting for 62% of that return.
Absolutely. I think the big tech rally has certainly continued. I mean, they have definitely still been delivering much better than expected earnings and much better than the market's overall earnings growth. So it really is all about the big getting bigger. And some feedback from one of our analysts that's just attended a tech and AI conference in Arizona. The feedback from that is that spending is continuing. There's absolutely no stopping this trend, and there will be a continuation of new products rolling out, but it is very expensive, and for that matter, it really is all around that big getting bigger while we all await the potential benefits to come through.
So that AI thematic expected to continue, obviously, into 2025. You talk about new products. In fact, we just mentioned Alphabet.
Yes.
Quantum computing. I won't get you to explain quantum computing, but this new chip, what's the impact of that then likely to be, do you think?
Yes, I think I would definitely probably have to Google that myself a bit more to really understand exactly what the implications are of that. But I think if you just take a step back and what this really means is that Alphabet or Google really are at the forefront of innovation. It showcases what they have been doing in the background. So it really does set them up as one of those thought leaders in this new evolution. I think quantum computing definitely is one of those things that for the last sort of 20 years, we always thought quantum computing is 5 years away, and that is now starting to come through. It will, however, I think, as is the case with Gen AI, take a lot of time to really see the commercial benefits of it. I think in the long term, you can definitely get benefits like, finding new medical solutions or new cures, or working out, what will happen to how to navigate traffic better or supply chain. So it can really, I think, expand across a whole range of sectors in the economy. But it is very early days. But yes, luckily we do own Alphabet, one of the Mag 7s that we still own, and largely because it's got not just quantum computing, but also because it's got a number of different business units that continue to do relatively well.
Now, of course, another stock in the Mag 7, Nvidia. Interesting, it's actually come off just in the past couple of sessions, but is that as a result of what we're seeing in China, opening investigation there in terms of perhaps it broke anti-monopoly laws there?
Yes, I think if I have to summarize my thought around 2025, it's probably going to be a tit for tat year, because this deal was agreed 4 years ago already, and at that point in time, Nvidia wasn't nearly as big as it is today. Really what the company does is networking solutions, so cables, those sort of things that assist in the networking side, and that's one of the areas that Nvidia has been expanding into, and it's really been very helpful for Nvidia in rolling out not just their semiconductor portion of the company, but also that networking side, which has become a very integrate part of the whole AI sort of supply chain. So yes, I don't necessarily think there's too much behind it. Clearly, there's a lot of sort of tariffs coming China's way, and obviously, if Trump comes in, it's going to be a year of you've done that, so I'm going to be doing this.
Yeah,
so.
as you say, tit for tat.
Yeah.
Meanwhile, of course, Elfreda, we have heard this week with China likely to loosen monetary policy, and that really boosted commodities as well as luxury goods.
Yes, I think the market obviously has been waiting for China to come out with something a bit more substantial. At this point in time, what they've said really is that they will be focusing on a looser monetary and fiscal policy going forward. We actually don't necessarily have a lot of detail on that yet, but if you think back over the last sort of 14 years, they had a more prudent policy. So at this point in time, what they're saying is they're willing to go to a larger debt to GDP level, really just to boost that growth and get back to the target growth. But it's all about the consumer there. I think China has got a consumer confidence problem. If you think back post-COVID, they didn't have the cash handouts like we did here, or the property market boost, or the equity market boost. So confidence there is really low. And I think clearly they've got a property market problem, but the government realizes they have to fix that in order to fix the rest. And that is really needed for us to get more confidence in the overall luxury play out of Europe. Vehicle makers, all of those are very dependent on China coming through. But it's not necessarily, in our view, fantastic news for commodities as a broader asset class per se. We think it will be more from a consumer perspective rather than the traditional importing more iron ore, for example.
All right, so you're perhaps reserving judgment at the moment of the full effects there. Nonetheless, are you considering increasing your exposure to China?
At the moment, we are not really exposed to any direct Chinese equities. I think for us, it's really more about those multinationals, trying to see where we can expand. We want to see details before we actually get more confidence that you will see companies like a Starbucks, for example, their sales in China has dropped, around 20-30% over the last year. So something like that, we really need to see that come through in the underlying earnings before we will be tempted to expand dramatically into those companies with big Chinese exposure. I think another market that's more interesting for us is probably India at the moment.
All right, well, what stocks have you actually added then recently with a view to what we're likely to see in 2025?
Yes, I think one of the stocks that we've recently added has actually been in the consumer space. We haven't really had a huge amount of consumer exposure over the last year, really because of consumer confidence being pretty low, and we have seen a lot of these companies actually come under pressure. But of late, we're definitely starting to see an improved consumer in the US in particular. So we've added Chipotle there, for example. It is a company that's, I think, very well managed, has transitioned very well into a new management team, and really has got a lot of the unit pricing benefits that can come through. So they don't necessarily have to reduce their prices to get the volume through. So a lot of expansion plans there. So we're very happy with that. Over the last few months, we've added companies like Netflix, for example. It's already run quite hard. So I think with all these sort of companies, you need to bear in mind that what the valuations look like as we go into next year and the dependency on earnings growth. And then something like Morgan Stanley is another one that we've added over the last sort of 6 months. And it's really on the back of capital markets opening up, and feedback from my colleagues that's just been to financial conferences in the US definitely continue to come back with feedback that capital markets are certainly opening up. There's more emphasis around M&A, RPOs, debt origination, all those sort of type of things that wealth companies like a Morgan Stanley needs to really benefit from.
And just briefly, once again with that AI thematic, ServiceNow, why are you looking at that one?
Yes, I think for us, we've always sort of invested in the AI theme in various stages. So initially you had those semiconductors, the enablers. Then we went through to have the more infrastructure players, like an Apple, for example, that roll out intelligent AI on the Apple phone. And now we're sort of going into that third phase, which is the services and software that sit on top of all the capability that's been built. And that is where ServiceNow for us is one of those standouts. It's really focused on incorporating AI in their business processing, focus on business flows, and the number of customers that they have is really so broad-based. So it's a very high-quality company, and one that we definitely feel that can be in the portfolio for a while. It once again comes back to that point. Just watch out for valuations and take profits as you grow into a bigger size in these sort of names.
Well, Elfreda, great to get your perspective of what you're seeing there at Alphinity for 2025. We look forward to catching up with you again in the new year.
Thank you. Enjoy the break.
Let's quickly check where we're likely to open in just a couple of minutes' time, and it is looking negative at this point. SPI futures off around 0.25%. Stay with us because the open is a minute away.